In a territorial tax system, international companies pay taxes in the country in which they are located and only if the earnings come from that same country. This means that territorial tax regimes generally do not tax the earnings that these international companies accrue abroad. This allows international entrepreneurs to operate from countries that are not formally tax havens, and therefore are not indicated in any blacklist, nor do they serve other limitations, but equally paying zero taxes for all earnings deriving abroad. Usually, when we talk about territorial taxation, we think of Southeast Asian countries, but there are many other countries that apply this system. The following are 11 little-known countries that allow international entrepreneurs to benefit from a territorial tax system: Gibraltar, Costa Rica, Lebanon, El Salvador, Saint Martin, Honduras, Guatemala, Congo, Gabon, Eswatini, and Bolivia. If you need specific advice, also to find the best place to relocate in consideration of your specific needs, you can contact us at the addresses you find in the description, and we will put you in touch with an international tax lawyer highly specialized in assisting clients in your position.